The essential risk parameters that Trade the Pool is giving us are also going to keep the risk to reward in play here. Because the number one thing that I talk about with those traders that are in that losing stage also, they're not focusing in probabilities. They're not even keeping probability mathematics in their favor. And this is where I think I've adjusted. And how do you know that you've adjusted? You're going to start taking a look into your plan and the results, right? And I think that this is what every trader needs to look at to see if they're doing things the right way or the wrong way. Because you can have the right plan and not execute the right trades, right?
How's it going, everybody? First of all, I love it. The fact that you, as presenter, as the host of the live trading show, actually passed the evaluation, got funded. That's incredible to see. And this is also a great confirmation to everyone that listening and watching. This guy is real. You did it. You did few attempts, right, before passing, right?
Yeah, it took me quite a few evaluations, right? And the thing was getting close, right? One of the things that I try to show on the show every day, and I think it's important because I live by it, right? Is just trying to find consistency. Because I feel like everyone can, just hit a home run. But the truth is we're trying to find some kind of consistency, because even if I do get to the funded stage, I mean, that's not my goal either. My goal is to get paid. I think that's what everyone's looking for, right?
Sure. For sure. So maybe, Mitch, let's start from the beginning, for the guys that are listening right now, and maybe also later on as we will upload this video. I mean, where did you start, right? How long ago?
The journey of trading, right? Well, the journey of trading really started back in kind of like 2017, 2018 for me, guys. Even before the pandemic, of course, I went to school at UCF for finance, and that's where it started, right? I always viewed myself as being the stockbroker on the New York Stock Exchange floor. As a kid, at 5th grade, I ended up taking a stock exchange competition, and I was buying Apple back then, two that weren't that good, IBM and ExxonMobil. But the Apple back then was what got me excited, right? How did I find that trade idea? I looked around, right? I saw in the library those colored Macs. Remember the big Macs with like the big background and things like that? And I saw that all the kids wanted to go on that one versus go on to the IBMs and the Dell machines. And that got me interested in trading, which brought me to UCF finance, which eventually got me into options. And I learned a lot about options from different resources. And then I learned that options wasn't for me, right? Because the truth is that it was very complex, complicated to learn. And another thing that I realized, I wasn't just battling traders. I was battling different market makers. I was battling different complex strategies, right? And whether I was going to be buying or selling options, I felt that selling options made the most sense. And that required what? Even more capital, guys, that I didn't have in my college days, right? So I stuck to what I felt could work. I went to equities. I started to learn more and more about trying to learn about underlying asset and relationships building. And that's when I first just started. I started with the penny stock, the gurus, the ones that everybody watches, right? Yeah. I mean, I can't blame you. I know Timothy Sykes. We all know him. We've all heard of him, right? That's where I started. And I think that it really got me to dig in deep into the education so that I could understand the markets, not just for one strategy, but understanding what strategy making involves, what does risk management involve, right? And then trying to find the sweet spot, because that's really where it takes. It's not just about trading, right?
And I want to touch, a few painful points. So tell us a little bit about the losing part, because there is a path along the way that you're learning, you're trying, a lot of failures or errors. Tell us a little bit about those kind of elements.
I think it's so important. I talk about this in stages, right? Because I think that this is what all traders go through, right? And we'll talk about it in 4 stages here, guys. Let's go to first just the losing stage, right? we're all going to go through this. I feel like a lot of traders and beginner traders, yes, you'll find those few that just immediately do well. And that could be beginner's luck, right?
Yeah.
But the truth of the matter is a lot of the beginners are going to struggle. They're going to lose, 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 lose. I was in that camp too. At first, I wanted to trade high flyers, high day breaks. And I felt like I just was like facing this mountain. And I kept losing, losing, losing. Then I realized, okay, not trying to just lose, just try to survive. That brings us to what I call the survivor stage, right? The survivor stage is that trader that can trade, but be break even, right?
Mhm.
Probably not even making money, but not losing and blowing up accounts anymore. I think that's
Yeah.
the first stage to get out of, right? And if you're struggling, that's the first one to do. Then as you get into that survivor stage, you move into what I call the lunch trader. What's the lunch trader? The lunch trader is the guy that can just pay for some lunch at least with his trading, right? Can just buy a good meal, right? Maybe not going to do something life-changing, but at least starts to get into the positive, understand some strategy, finding some problems probably with consistency here on sizing majority of the times. For me, that's what was hurting me in this case. Then we got to get into the thriving stage. That's what all traders are looking to
Stats
do.
and see the
And I think that
progress.
sometimes you're going to be in the thriving stage and move back to the lunch trader stage. So the key is just not moving back so far that you're back into that losing stage, right?
Sure. Yeah.
So once you're in that thriving stage, you start to really start honing in on your consistency and trying to hone in on what? Just trying to stay in the zone. Because as traders, I believe in a thing called the present, right? And focusing on what's happening, right? But a lot of times emotions and different things come into here where we lose train of thought, we lose that focus, and we fall off into a rut, probably moving us back to the lunch trader stage, right? So there was somewhere in between there where I felt like I really started to make the change between lunch trader and that thriving stage. And a lot of this was starting to separate the accounts, right? And then the account that I was able to make happen here was actually the one that I didn't expect to make happen, which was the small cap area, which some view as the toughest trades in the market.
Yeah. And you know, I always compare it to basketball, right? The what you mentioned about going from lunch to drive and then maybe go back, right? It's like a team that, you know, get a nice range and all of a sudden they lose the momentum and go back and the other team is winning and so forth. And I want to talk to you about also something that you mentioned there, where basically, you know, you moved from those stages, right? From losing to survivor mode. What was the change that you think, or maybe like 2 or 3 for the guys that listening, you know, that got you from survivor or from losing to survivor at least? Because most traders will stay on that, you know.
It's the most important stage, right? It's the one that starts to build confidence also, right? Because I think that's the number one thing that the loser stage brings, right? It could instantly break your confidence as a trader, right? I think we all can get to that point. What was my determinant was I wasn't going to stop. If it took trading one share, I would do that, right? And that's why I talk sometimes of just downsizing until learning. And I think that's one of the best things that Trade the Pool can give you is just the ability to work on your craft as a trader. It's not necessarily only for those traders that are trying to just make big sums of money. It's also for the trader, the beginner trader that's trying to get out of that stage and not just lose a ton of money. Because trust me, I was there. I even sold my car, Michael. I sold my car for trading. I rode a longboard for 2 years because I wanted to make this happen. Did I make that money work? No, believe it or not, I lost it all in a small account, in a regular broker, right? And it didn't make me run away. It made me push more. And what did I start doing? Started honing in on strategies that I felt truly worked, that I back tested, that I did the research to see what was doing well. And then I stopped trying to win. I just tried to simply stop losing. I think that's where a lot of traders get it wrong. Their mentality is just focused on winning versus I'm just going to protect myself in trades and focus in on making small base hits to get into that at least survivor stage.
Amazing, Mitch. Lots of knowledge here. I'm sure the guys that listening right now, a lot of them are trapped between those lines of losing and survivor. Try to take it to the lunch money, as you mentioned, and there are tons of information and things you need to learn along the way. But maybe one of the most important thing is, like you mentioned, you blew some of previous accounts, right, with a broker. Instead of doing that, and this is something that I enjoy represent, and obviously you as well, you know, at TradethePool, it's a limited risk trading platform, right?
Yeah.
You don't have to spend the whole 5K or 3K that you have on a broker account. Instead of that, you can work with us, learn, craft your trading, and basically have a shorter learning curve as well.
Yeah, I think I smile about this because I don't think there's too many people that smile when they see that RIP, the rest in peace for the day, and you cut me off. But the truth is, you should be smiling at that moment. And why? Because I can tell you, I've been on the opposite of that, Ed, where you got the deer in headlights look. And if you don't get out, trust me, you lose the whole account. That's
and
just,
in most cases, you won't get out. So
yeah, because you're just deer in headlights, right? And so the essential risk parameters that TradethePool is giving us are also going to keep the risk to reward in play here. Because the number one thing that I talk about with those traders that are in that losing stage also, they're not focusing in probabilities. They're not even keeping probability mathematics in their favor. And this is where I think I've adjusted. And how do you know that you've adjusted? You're going to start taking a look into your plan and the results, right? In a little bit, we can go to the dashboard and talk a little bit more about this. And I think that this is what every trader needs to look at to see if they're doing things the right way or the wrong way. Because you can have the right plan and not execute the right trades, right?
Sure. Yeah, and exactly. I wanted to go to the dashboard. So for those of you not familiar, every trader gets his own dashboard, and basically you can track your stats and of course the progress that you're doing. So I'm going to share my screen for a second and show the guys at home how it looks like your evaluation account, basically the one that you passed. So we'll do it like this. Alrighty. So basically you traded the mini buying power, $20,000 of buying power. You need to reach a certain goal, profit target that you did. You have max loss and so on. And some of the interesting stats that you have here are really interesting. One is your success rate, 44%. That's totally fine. The risk reward is off the chart. I mean, you did greatly, 4.1. So we'll talk about that. And also the chart, you managed to go very nicely at the beginning and then kind of smoothly until you reach that target. So take me through the risk reward kind of thing.
So this is my biggest focus, right? If there's one thing on here that I think you should focus on, there's really two, right? It's the risk to reward ratio, but also the success rate, right? So the comparison here is what I was talking about, the planned approach versus actual results, right? So my planned approach, a lot of the times when I'm getting into trades, is trying to first focus on the risk to reward ratio, right? Because this is what I mean by mathematical probability, right? We're all trying to find a way to where I don't need to focus so much on accuracy, but if I can focus on the right risk to reward, I can still be in the green. And I feel like when I first started trading, I did these like high of the day breakout strategies that you needed to be 80, 90% accurate with a 2-to-1 ratio, right? So I'm trying to get $2 for every $1 that I'm risking, right? You can do it as a 1-to-2, just depends on where you put in the risk or the ratio. I sometimes bring the reward first versus the risk, but that's what I started to look at. Another thing is, if I'm setting up for a 4-to-1 return, do I actually achieve that? So what I like to look at a lot of the times is a 3-to-1 or 4-to-1 look. Why? Because this is going to get me to the point where I don't even need to be as good as a flip of a coin. That's the way I think about it. And if I can't be as good as a flip of a coin, I always tell myself, well, Mitch, you're in the wrong business then. You might want to look somewhere else, right? And so I started to adapt my mathematical probability to give me that chance where even if I'm 40% accurate, I'm in the green. If I'm 50% accurate, oh, we're looking great, man. And
It's not lunch money.
this is where I think a lot of traders struggle, right? Maybe their risk to reward, their setting is a 2-to-1, but then when they look back at the dashboard, it says they're trading at a 1 to 1.1 or a 1 to even 0.9. And this just shows that you're not willing to hold to the reward and you're not willing to cut the losers. So a lot of traders can cut the losers. What a lot of traders struggle with is because they've been losing for so long, their confidence gets depleted that they can't hold to the winner. They can't take that actual 3-to-1 look. And so they run to partial gains or they run to the gains because they're just scared of losing. And that scaredness can really deter you in your trading. So you have to look back at your plan and seeing, am I risking and getting the right reward? And then when this falls off, slowing things down, right? Because that's what you're going to see here in a little bit. So of course, I first started with some good trades because I think it's also important. At the end of the day, with the evals, what it gives you the ability to do is to take your shots, right? You're only going to be able to lose the evaluation. So focusing on this at the very beginning is important because what we're all trying to do is the same way that I take the approach in our competition accounts that we have sometimes. And I learned this from doing more competitions and things like this right here on Trade the Pool, which was, hey, build a cushion first. Build the cushion, right? Because that's what I need to do. And on the first couple of trades, I was able to do that, right? On the first couple of trades, you guys will see, I took some nice big winners. And this CHRO, the first trade that I made 184 was absolutely done every step of the way live right here on the show, right? And I think that things like this are really where you start to make a difference. And one of the things that the show helps me do is keep accountability, guys. And that's why I'm fully transparent to you guys. And I say, all traders, be fully accountable of your actions. Find somebody maybe that keeps you there. What I call an accountability partner, somebody that can help you, someone that you can call up. I can call up Michael and I can be like, yo, Michael, take a look at my stats right quick. Tell me what's going on here, Michael, because I sometimes can't see it for myself, right? You guys keep me honest on the show all the time, right? If I start just, risking, 5 to 5, and I'm risking just an insane amount of money, that's quickly how we just ruin our math, ruin the hard work that we do. And that's the most important in trading. Just don't ruin your hard work.
I'm going to touch on 2 points here that you mentioned, Mitch. One is the risk reward kind of thing.
Yeah.
It's all start, I guess, like you said, the plan. So at the beginning, instead of aiming for a 1 to 2, a 1 to 0.5, whatever it is, go bigger, right? Because you're aiming for 1 to 5, but you will actually get 1 to 3. And this is also great when you have a nice success rate. So aim for a bigger risk reward at the beginning when you're building that plan. And second thing that you touched on, the accountability, right? As traders, it's a lonely game. So it's kind of hard to find that extra pal to work with. In our case, you can definitely join our Discord community, and then they also have accountability program there. And it works great because it's like, trying to lose weight or going to the gym. If you have someone to go with, you automatically give yourself that psychology, the success psychology that you need.
I agree 100%. And surrounding yourself with those types of people too, right? You don't want to surround yourself with losers. I'm sorry, but that's just the way it is, right? That's why I love even doing what we do here, right? I can tell you guys right now, I love being on stream with Michael Noss. He's a craft worker. He's a guy that's working on his craft. You want to surround yourself with those types of people because that's what's really given me the ability to learn from my mentors, different traders out there that I talk to. And it doesn't need to be something that I talk to them every day, but I just learn from them. I take their wisdom and I try to attach it to certain things that I can bring, right? And that really can make an impact on your trading career.
All right, and Mitch, before we finish, I got to ask you one more technical stuff and then we kind of wrap it.
Yeah.
Tell us a little bit, obviously the guys that watching our show, they know what you're doing. But for those who are not familiar yet, what is it that you're looking for? You trade in penny stocks mostly, like small caps. Tell us a little bit about the ins and outs of your strategies.
Got you. I think this is as important as it is taking the trades, right? And I'll give you guys the goal that I like to do. Well, one of the things that I like to do, of course, is use one of our partners, right? I think it's so important that we offer different partners and that Trade the Pool has for you guys. So I'll show you guys really quickly here a scanner that I use on Benzinga Pro, which is, of course, one of our partners that you guys can be getting. And you can use different scanners to find this. What I'm doing in the morning is a lot of the times I'm looking at the change in the pre-market, right? You're going to find some big movers here, right? But what I'm specifically trying to find is 5-minute change percentage and 15-minute change percentage. So I want to find that there's a stock here that has, let's say, maybe 15 to 20 or higher percentage in the morning, and then just kind of starting to stumble out, right? Starting to pull back, starting to give me a nice little setup on the charts. Then I'll be looking for it to show up quickly on the 5% change. Usually it's going to be like 2 or 3 or 4%, but you see that the stock is going up big, right? Like this one that just popped up, that ENV, it just went off really quickly there. There he goes, ENVB, right? It's up 134%, but right now it's only changed like 0.5%. Those are ones that you want to watch. Another thing to look at is the volume. I'm trying to make sure that I'm trying to trade the ones in the morning that are closer towards at least 1 million shares traded, right? And that's going to give me the ability to do what? So essentially scan the pre-market action, trying to jump on a lot of these trades in the early pre-market and make some quick moves higher. The important part, it's taking smaller trades in the pre-market, right? And that's where I think a lot of traders do things wrong. They want to take a bigger swing because the stocks make bigger moves in pre-market, but I'm trying to use that bigger move to give myself risk to return, right? That 4-to-1 outlook or 1-to-4, right? So where I can go ahead and risk maybe 20 cents, right? But I have to make 80 cents, right? So the stock needs to boom a lot of these times, right? So with the smaller size, that's what's going to help me there, right? Because then I can take multiple haircuts and wait until I run into the runner, right? And that's what a lot of times is going to happen. You're not going to know it's going to be a runner. You're going to take it based on the setup, take the trade, and look to see if it gets that boom. Another thing is, I don't jump on these after they're breaking out, right? That's what a lot of traders like to do. They use momentum scanners, they wait for the boom to come, and then they try to get in. That's where I feel like it's the hardest trade to jump on. It's like trying to jump on a moving train, right? You're not going to catch it while it's moving, but you might catch it at the stop before, right? That's where I like to look at patterns, use my approaches to psychology. And another thing that we've been working on during the live stream is looking for psychological strategies more than just technical strategies, combining the technical strategy and then looking for things like a psychological washout, liquidity pools. Things like this are so important to try to catch the momentum of traders, right? At the end of the day, there's not one recipe of success that I can tell you guys, you just need to trade this way. Because if it was that way, I'll tell you guys right now, I get the heck out of here and go make $1 million. But the truth is, that's not the way trading works. It ebbs and flows in the way things work. Sometimes strategies are going to be working more than others, and then sometimes the strategy is going to go down. So you have to find what's working. With penny stocks and small caps, even more. There's times when we got to hit the gas pedal. There's times when we got to hit the brake pedal, right? And I think that this is where the hard part goes of these small caps. There's moments when you can find 5, 6 runners in one day. There's moments when there's not a single one in play. So keep remembering that. Small pre-market look, quick trades. Then in the intraday, have to see those washouts before I go into the trade.
And I love the fact that you have a sell and buy. So you got long positions, short positions. So you're versatile. And it's important because I always tell, especially to our penny stock traders, and we got plenty of those because we don't have hard to borrow. and other amazing features that you always need to look for the long side as well, right? The stock before it drops, it pops, right? So you gotta find ways to maybe catch that instead of just waiting for it to drop and then go for the short side. So that's important as well. Mitch, first of all, thanks for the interview. It was amazing. And I'm sure the guys that listened, got tons of information and knowledge from this. And for those of you who want to check us out, go to tradethepool.com. Maybe you will be the next funded trader. Thanks so much, Mitch, and best of luck on your funded account. Let's go.
Yeah, thanks a lot, man. And I appreciate Trade the Pool giving me the opportunity. And I would say for all you guys listening in, come over to the live stream. Come talk with me, right? Because at the end of the day, if I can't help you guys, I'm not doing what I expect to do, right? At the end of the day, I can't give you guys the answer, but one thing's for certain, I'm here for the journey. And I'm here to battle with you guys. Wins and losses, you guys can learn from my wins and mistakes. I always talk about how every trader has strengths and weaknesses that we can learn from. So come learn with me also on the live trading stream. It's not about acting like a guru. It's more about showing you guys a professional approach. So come on over. We'll see you guys over there.